What kind of company as a monopoly can grow its cash flows 20% a year for the next decade? How many do you know? That's like the Magnificent Seven, okay? There's 7,000 public companies, and 7 of them, Google, Apple, Microsoft, are the most famous, right? Yeah, you can literally, if you're a company, you can probably move to a different country more easily than you can switch your systems from using Microsoft. So Microsoft and Apple and Google are more powerful than most nation states, right? That's how powerful they are. So 7 companies generate all the return. 7,000 companies don't generate shareholder return. Why? I just explained to you why. Because if the inflation rate is 7 to 10%, then you have to be able to guarantee me that you can grow cash flows at 12 to 20% a year for the next decade, every single year. And the truth is, no, by definition, if you're not a monopoly, you can't, right? Real estate leases are capped at CPI. So if the CPI is 2% and the real monetary inflation rate 7%, it's very difficult to raise my rents that fast. It's very difficult to raise my prices that fast. It's very difficult to raise my value, my revenues that fast, and the cash flows that fast. So ultimately, what you have is an example where the monetary inflation rate is benefiting people that own a scarce asset like Bitcoin, and it's undermining the other assets. And so instead of focusing upon currency, because, there's $900 trillion of like wealth in the world, you only need 30 trillion to 60 trillion of working capital to basically trade high frequency, to buy things, and et cetera. The other $850 trillion is invested in real estate, bonds, stocks, collectibles. So you see, if Bitcoin is the strongest asset, then what's going to happen is people are going to say, I'm not going to invest in real estate and value it at 25 or 30 times rent. I'm going to value it at 10 times rent. And so maybe I've overvalued the real estate by a factor of 2. And so I sell the real estate and I buy Bitcoin. And I'm not going to value the S&P index at 25 times earnings. I'm going to value it at 12 times earnings. And I'm going to sell the S&P index and buy Bitcoin. You see, as we demonetize, I'm not going to value the bonds. Why would I hold a bond that yields 3 or 4%? If I get paid 5% interest after tax, it's 3%. So you're getting 3% after tax, return on a bond. And if Bitcoin returns 14 or 15%, then why wouldn't I sell some of my bonds and buy some more Bitcoin? So what you have is capital. It's flowing from the weaker assets to the stronger assets. In weak countries where there's hyperinflation, the currency collapses. Well, then, what happens is I sell my pesos and my bolivars and I buy dollars. Okay. And so you see that on the edge of the economy where I'm trading the weak currency asset for a strong currency asset. But don't make the mistake of thinking that's the right idea. That makes sense when you're in a crisis situation, a hyperinflation situation. For most of the people that live in Japan, in Europe, in the United States, in the developed world where there are healthy economies, in the Middle East, the right trade is you trade your weak assets or your currency derivatives for non-currency derivative, for the strong asset. So what are things that people value not based on cash flows? Like a Picasso painting, a franchise, a trophy asset, the middle of the city, 10 acres in Palm Beach, right? Beachfront property. Things that the reason that real estate in Miami Beach goes up faster than the CPI is because you can't make more linear beachfront real estate in Miami Beach, right? It's like there's 8 miles or something and you can't make it 16 miles or 36 miles. If the government could somehow bend dimensions and create 1,000 miles of beachfront property, then beachfront real estate wouldn't be a good investment. So you see here, I'm not, all of the Bitcoin haters, they always jump on top of this. It's not a good currency because, it's volatile and because people won't sell you things in it and you can't buy things with it. And they have basically brainwashed and straitjacketed themselves mentally by picking the wrong model. And the right way for them to think is, if I gave you $100 billion of real estate in Africa, and if every country was unstable in its government, and if the people that ran the country didn't like you, would you keep the real estate in Africa or would you trade it for Bitcoin? And once you get that idea through your head, if you lose confidence in the policies of a government, or if I gave you $1 billion of stock in a company, but the CEO was crazy, would you keep the stock or would you trade it for Bitcoin? When you lose confidence in an executive, when you lose confidence in a company, when you lose confidence in a country, when you lose confidence in a currency, most of your wealth is tied up in the real estate and in the assets in the country and in the stocks that are exposed to the country. So as the world sees chaos, as they get nervous, you trade the assets that are exposed to the chaos risk, to the counterparty risk, and you buy the asset, which is not a currency derivative. It's not a country derivative. Bitcoin doesn't care about the company's management team. It doesn't care about the employees. It doesn't care about the country it's in. It doesn't care about the currency it's in. You see, you're moving out of that dimension. And so what you've really got is something like 99.5% or 99.9% of the wealth of the world exposed to country and currency and company risk. And Bitcoin is the alternative. So we don't have to replace the CNY or the yen or the euro or the dollar for Bitcoin to go from where it is to 10 million a coin. All we have to do is educate the people that own everything in the world that Bitcoin is digital property. And once they understand that Bitcoin is digital property, they realize they're overexposed to physical property. They're overexposed to physical companies. They're overexposed to physical stocks. They're overexposed to physical collectibles. They're overexposed to gold. And people aren't stupid, right? They're rational. Once they understand this thing is better, they just start selling the thing that is imperfect and buying the better thing. And the capital flows from the traditional 20th century economy into the digital economy of the 21st century. Bitcoin's price adjusts up because the supply is fixed. As the price goes up, awareness increases. As awareness increases, investment in the ecosystem increases. As that increases, regulatory clarity increases. People build more products like the spot ETFs. They build new exchanges. They build new custodians. Conventional banks offer custody services. Conventional banks offer credit services. Insurance companies get involved. Politicians get involved. Eventually, big tech gets involved. Pretty soon, it gets built into the iPhone. It gets built into Google. It gets built into Microsoft. As it gets built into these things, retail and institutional awareness builds. As it builds, people realize they're underexposed. New use cases get commercialized. People embrace the new use cases. Demand increases. The price moves up. Rinse and repeat. The entire thing is a virtual cycle, and it's a reflexive cycle or a positive feedback loop. And because Bitcoin is just pure money, right? It's just as effective at 100,000 a coin as 10,000 a coin. And at 1 million a coin, it's just as effective. And at 10 million a coin, it's probably more compelling at 10 million a coin than 1 million or 100,000 a coin. It's kind of a universally scalable asset that gets less risky. The only thing that's going to change, in my opinion, is when it was super risky and scary below 10,000, you were getting 100 to 200% a year annualized gains. And then when it got a bit more understandable between 10,000 and 100,000, your gains go to 40 or 50% a year. And then at some point they go to 30 and then 20. And, you know, in the extreme, if everybody in the world understood Bitcoin, it would be 20, 30, 40% of the wealth of the world. So it would be 200, 300 trillion in today's dollars. And then the price would be appreciating at the rate of global inflation in the fiat currency. So if global inflation rate remains at 7, it would still be appreciating at 7. And then it would appreciate a little bit more because of the productivity of the people that adopt it as a treasury reserve asset. So like when MicroStrategy makes money and cash flows, we sweep our cash flow into Bitcoin. So we're dollar cost averaging or we're Bitcoin cost averaging. And when you earn money, if you understand Bitcoin as your treasury asset, every year you make some more money, or every month or every quarter, and so you buy a bit more Bitcoin. And so yeah, the price of Bitcoin is going to adjust up based on the productivity of the ecosystem and the inflation. And of course, technology will just keep advancing. And so technology is going to drive down the cost of everything else, but is not going to drive down the price of Bitcoin. Is going to drive up the demand for Bitcoin and drive up the utility of Bitcoin. So Bitcoin will continue to appreciate due to adoption, technical utility, productivity of the people that use it, and then the fiat currency inflation rate in the frame of reference, whatever that is. And look, if God kings take over the world and they run a, you know, if an AI ran the world perfectly, smarter than any human being has ever run the world, maybe they introduce the perfect fiat currency and they eliminate inflation in the fiat currency. So the future AI dollar has zero inflation, but it's a medium of exchange, and it's a great way for people to do accounting and the like. Bitcoin's still going up in value because the technical utility of Bitcoin is going to continue. And the productivity is going to continue. And the truth of the matter is there's always going to be chaos in the physical world. There's always going to be chaos in the political world. And that chaos it devalues currency, it devalues physical property, and it devalues companies because it's happening in the physical world, like that tidal wave. But that chaos is going to increase the value of Bitcoin for two reasons. There's a big idea. The first reason is as people lose confidence in the countries and the companies and the currencies, and their other assets, they'll run to Bitcoin. That's one reason chaos is an engine for Bitcoin. But the second reason is if you got drunk and you burned down your building, you would destroy capital. If you got angry and you destroyed your company, or you did a stupid thing, like maybe you produced the wrong product and nobody wanted to buy it and you bankrupted your company, you've destroyed capital. If you start a war and you bomb another country and you wipe out the entire city and all their factories, you've destroyed capital. So chaos in the real world destroys capital. But if you get drunk on a Saturday night and then you go swimming and you lose all your Bitcoin because you drop your hardware wallet in the ocean, or if you forget your seed phrase, or if you have it in your head and someone shoots you and it's gone forever, you've actually not destroyed the value. You've actually accreted the value of everybody else's Bitcoin, right? So chaos that destroys your keys and the Bitcoin that's lost is actually not lost. If I burn down half the buildings in the world, you've destroyed half of the real estate capital in the world. But if I lose half of the Bitcoin stored in hardware wallets or in your keys, I haven't lost anything. I've just doubled the value of everybody else's Bitcoin. So you see, chaos strengthens Bitcoin as an asset class and drives more capital into the asset class, whereas chaos is undermining everything else in the conventional 20th century economy. So that's, why I'm bullish on Bitcoin in general. And I think that as other people learn this, if they figure it out, as the education spreads, then you're owning a bunch of capital and you realize, oh my, I'm exposed to chaos on this side of my portfolio, and I benefit from chaos on this side of my portfolio. There's a famous book called Anti-Fragile, and the whole theory of anti-fragile is things that get stronger under disorder, right? Things that get better under chaos, right? So Bitcoin is that thing getting better under disorder, not getting weaker. And most everything else, every other idea is probably getting weaker